My thought is that there will be an increase in the interest rates going forward as well. The inflation still needs to be controlled as per the Reserve Bank of India. We're seeing at the global level the inflation numbers really swelling, and we are seeing many central banks increasing the interest rates, and so has the Reserve Bank of India been doing it. I think is that there will be, another 50 to 100 basis point increase, before the taming of inflation happens, and this will then get passed on to the home loans as well, thereby increasing the EMIs. The second part of your question is, how is this going to impact the demand? So certainly, if the EMIs continue to go up, there is an impact on the demand. It is globally, and so is in India. Although I must say is that India, the ability to absorb higher EMIs is far greater than what it is at a global level. For every 0.5% increase in the home loan, your total outlay, the EMI increases 5%. So remember, for every 0.5% increase that happens in the home loan rates, the increase on the outflow of the EMI is about 5%. Is this going to have a huge impact? My thought is that between 50 to 100 basis points, the home buyer will still be able to absorb. And I also think where we were in the prior regime of home loan, where we were at 12%, 11%, 10%, used to be in double digits for a very, very long time. We have now been in the single digit. And my thought is that until we remain within the single digit, so we are at whatever, 8.5% today. So our ability for the home buyer to, go up to 9 or 9.5% without having a serious impact on the demand is going to be very much there. I think there are 3 or 4 ways, Avneet, that it can happen. One is that you can go back to your lender and say, look, can you increase the tenure of the loan? If you increase the tenure of the loan, then automatically the EMI per month comes down. The second is that if you have any savings, you pay as a lump sum so that the EMI comes down. Third is that many a times developers come out with some schemes, and you are able to then utilize those schemes to be able to bring your EMIs down. And fourth, I would say, is in an inflationary market, just be very careful when you are taking home loan that don't start to breach the ability to pay. So borrow only that much that you believe that you're going to be able to service without stress. Don't go beyond and be aggressive in taking home loans, which then, as the EMI continues to go up, starts to impact your mental health, and you become a lot more concerned about it. So, as an advice, I would say is make sure that you're taking the home loan, but take it to the extent that you're going to be able to easily, without any stress, service this, even if the EMI was to go up because of the increase in the interest rates. My thought is that there will be interesting offers. The developers are looking aggressively at this festive season. Fortunately, COVID seems to be behind us, and this is one clear year that they're going to get after 2019 over the festivities, where there is no hangover of COVID. So many developers are going to go aggressive with their offers. Largely, the offers will be around ability to absorb the increase in the interest rate by the developer. And that's where the thought process is going to be, is that if there is any subsequent increase in the interest rates for a period of time, the developer may give that warranty to the home buyer that we will absorb it. So for example, the developer may come out with a scheme that you only pay 6% or 7% as your home loan, and anything above that, we will continue to service it from our own pocket. I don't think there are going to be large schemes where the developers are going to bring down the sale price, because given the increase in the input cost and given the way the demand has really stacked down, I don't think there is any stress to bring necessarily the sale price. I think it is more to excite the home buyer and to bring in the urgency that they will come out with these schemes during the festive season. And that's what you're going to largely see more around the EMI and more around the interest payment for the home loan taker. So first, I'll cover the new home buyers. It is an exciting opportunity. Clearly the urge for demand from the end users continues to stay very, very strong. We're seeing a lot of the millennials buying it, a lot of people preferring plots, independent villas, houses, a huge amount of demand come up in tier 2, tier 3 cities. So we do feel is that this festival season, we will continue to see that process happen through the next 3 or 4 months in there. And I do want the home buyers to be able to take advantage of the schemes that these developers will bring on board. Finally, I do feel is for the buyers who are wanting to buy it today, there will be an increase in the cost as you go ahead, not because the developers want to necessarily increase the cost for their profit, just that the input cost, their cost of construction is going up because of the inflation. As a result of it, they will pass that cost to the home buyer. So, I would say is do look at it with some urgency, because, these prices of homes are set to increase because of the rising interest cost for the developer and rising input cost for the developer. For the existing home buyers on the EMI, as we discussed it, just have a look at it. That is there a possibility to be able to extend the period of your loans, so that any increase that has happened on the monthly outlay, is nullified by the increase in the tenure of the loan. There are also fixed interest rate home loans, which are a little bit more dearer, and they are fixed for a period of time. You can take those fixed home loan interest rates as well for a period of time. LRB, it's 1 or 2% more expensive than the floating, but it does give the surety that this is what you're going to pay for that duration of time period.